Hello, this is Frosty Andrews, CPA, with your March 2021 update. Yes, I said March, and that means spring training is taking place for you baseball fans with opening day right around the corner at April 1st. So hang in there, it's almost here. We'll look forward to the great American pastime. Hey, our last two updates talk a lot about the legislation that was passed in December. And we were hoping after that point it would be completed as far as new tax laws and we can focus on implementation and tax preparation this next few months. Well, there are two new pieces that we want to bring you up to date on. One you're probably well aware of. Last week, the House of Representatives passed a $1.9 trillion package. It's now going over to the Senate and then reconciliation to iron some things out. But the major things in there you might be curious about, first of all, is the stimulus check. On top of the $600 that came out in December, they are looking now to give another $1,400 check and using the same income thresholds of about the $75,000 individuals, $150,000 married filing joint going forward. So that is one of the major pieces. Another one is the child exemption credit. Right now it's at $2,000 and they look at putting that up to about $3,000 and possibly $3,600 per child for those under 6. And another piece they're looking at is the unemployment. Unemployment in the December bill when it came out extended it, the federal package of $300, that was being extended through middle of March. That's why we think in this next 2 weeks you will see something signed off on because the unemployment as it is right now will come to an end. So the new bill looks like it will extend the unemployment again and increase it from the $300 federal to possibly $400. So that's the good news. Now here's the flip side of that. Unemployment since the mid-1980s has been taxable. That surprises a lot of people, but that is the case. You receive the income, you're still going to pay tax on it. They had talked about putting some language into exempting the first $10,000 of income to be not subject to tax. Our understanding is the bill that's been pushed forward to the Senate did not include that language. So we don't know as it continues in the process if it will come back or not. So if you had unemployment, you know a lot of people in our firm, we have a talk with those returns and said, would you like to wait on the return to file to see what the ruling will be or file the return now? And if it passes to where you do get an exemption, then we'll just go back and file an amended return. So we're keeping watch on that right now. So those are some interesting things that are being put forth. There's a lot in the bill that deal with municipalities and cities and retirement plans and so forth. And we're not going to touch on those right now, but those are some of the highlights. The other interesting thing is at the state level. Now the PPP program, you know, when it came out, that was a federal program and you could try to get forgiveness on those funds. But initially those funds, any expenses you paid for with them were not going to be deductible. So in December, the federal government then said, all right, those expenses you pay with PPP funds will still be deductible on those business returns. But the states across the country had not conformed to that. Well, right now with AB 80, Assembly Bill 80 in Sacramento, which is being backed by Gavin Newsom on this, that they are now saying the first $150,000 of expenses paid with the PPP funds will be deductible. Now, this isn't signed into law yet, but it looks like it will go that direction. So again, we've got some business returns that we're kind of holding up on filing because we're wondering where they will fall on this, and we will keep you updated. Lastly, on another note, just let you know that some things that they're looking at, and you hear about certain taxes in the estate world or high net worth, that, yeah, there is some talk about that. In fact, our current president and administration ran on a platform saying he would like to make changes to the estate tax, as well as the step up in basis. In other words, when someone passes away, those that inherit that, there's a general rule for most properties, and there are exceptions, but most properties can then get a step up in value for those that inherit it. Well, they are looking at maybe removing that. In this last week, Elizabeth Warren now has introduced some legislation saying they would like to tax the high net worth individuals in our country. And so they will set a dollar amount and say if your net worth is above X, they would like to assess a surtax on an annual basis. I don't know how far this will go or not, or if this thing will die next week or if it'll go through. But just the point being is, in the estate planning world, there is talk at some high levels of making some changes. So we are keeping our eyes open to that, and as they come through, and for those of you we need to update, we will do that with you. And I know some people are wondering, what is a high net worth individual? And here's something we have found across the board. It is always someone that has more money than you. There's very few people I've met that says, yep, I am one of those high net worth people, or who makes a lot of money. It's always a $1 more, or someone that makes more than I do. So we'll wait and see where that comes out, but there is talk in that area. So otherwise, we hope you're all doing well. We'll keep you updated, and have a great month.